In our report, economic growth in the third quarter turns out to be slightly better than expected.
There are fears that Japan's economy could be headed for a downturn. We'll have a special report.
And the Dow takes a downturn on Wall Street.
The Nightly Business Report, made possible by Digital Equipment Corporation, providing customers with the computing resources to facilitate easy, efficient teamwork across the entire enterprise. Kidder Peabody, one of the world's major investment firms, and GE Capital, providing business with comprehensive financing, two companies of GE Financial Services. A.G. Edwards, members of the New York Stock Exchange, serving individuals and businesses through more than 380 locations. A.G. Edwards, investments since 1887. And by the financial support of viewers like you. The Nightly Business Report is produced in association with Reuters, the world's largest electronic publisher.
Good evening. The latest reading on the economy shows slightly higher growth in the third quarter than first estimated. The Commerce Department now says the gross national product rose at an annual rate of 2.7% rather than the 2.5% it first reported. That means the second quarter now stands as the period with the weakest growth of this year. Economist Robert Brusca says the revised GNP figures for the third quarter contain some encouraging signs.
This report actually makes the economy look a little bit firmer, the consumer spending better. The foundation for consumer spending is in a little bit better shape, that is consumer income. And at the same time, we've got somewhat leaner inventories, and so the industrial sector doesn't look quite as troubled. We know we have problems in the auto sector, and we know corporate profitability is in trouble. But on the spending side, the consumer seems to be on a little bit more stable ground than it looked in the previous report.
And regarding corporate profitability, the new GNP numbers show that after-tax corporate profits fell by a sharp 7.2% in the third quarter. It was their third consecutive decline and their steepest fall in 3.5 years. Linda?
A top-level U.S. governmental delegation today arrived in Poland to determine how to disperse $847 million in new U.S. aid to that country over the next 3 years. Reuters correspondent John Defterios reports from Warsaw that the delegation's objective is to help Poland find ways to help itself.
The Google family farm on the outskirts of Warsaw is a prime example of what the Polish government is looking for. It is privately owned and operated without government assistance. But under current economic conditions, featuring hyperinflation, the owners find it difficult to make a living.
It's very important for the government to make the prices stable, because this is very important for me.
The U.S. delegation arrived in Poland today to look for ways to shore up problems in agriculture and other sectors in this economy. Delegation leader Clayton Yider said the group of government and business leaders will attempt to provide Western know-how to Eastern problems.
President Bush asked us to come to Poland to listen, to learn, and to discern what we can do to help.
But it is clear at this juncture that the help will not include extra money. Recently, Congress approved a bill to provide about $400 million each year in cash and credits. U.S. officials say this trip was designed to get that aid channeled to Poland in the best direct manner. The visit comes at a crucial time for Poland. The government's in the midst of an economic transition, which has brought on an economic crisis. In August, the government announced a plan to get Poland out of running 95% of its own industry. At the same time, it lifted price supports for consumer goods. This has unleashed inflation, which is now running at an annual rate of almost 500%. U.S. officials on this trip hope that foreign investment will play a big role in Poland's recovery. This TV factory, for example, could be part of a joint venture or even bought out. The idea is to generate exports, but experts say it will cost a lot of jobs and take some time.
To create private capital, people who can take over the industries which are up for privatization, all this will be extremely difficult, and it's going to require substantial Western assistance.
The U.S. delegation will complete its tour on Saturday. It will include meetings with both governmental and business leaders. While many find this tour useful, economists here believe that this sort of assistance, without a lot of financial backing, may not do a lot to help the Polish economy. In Warsaw, this is John Defterius of Reuters for the Nightly Business Report.
A lower opening on Wall Street this morning was quite a disappointment after yesterday's gain of 7 points enabled the Dow Industrial Average to close above the 2,700 level for the first time since the October 13th meltdown. But there were reasons why sellers took the upper hand. First, the small and now not so trend-setting Southwest Bank of St. Louis announced it was raising its prime rate a half point back to 10.5% after lowering it to 10% 3 weeks ago today. The bank said it was lonely at the lower level since no major banks followed its lead, nor had the Federal Reserve really eased monetary policy enough to justify the move. Today's report of that 0.2% upward revision in third quarter gross national product growth might explain that. What's more, over the previous 5 trading sessions, the Dow had advanced almost 70 points, making it quite vulnerable to profit-taking. At 11 a.m. then, the industrial average dropped nearly 6 2/3 points, while losing stocks took a commanding 7-3 lead over gainers. Relatively light volume on the sell-off encouraged a reflex rally over the midday hours, and news that Philip Morris would buy back $1.5 billion of its stock was also supportive. At 2 p.m., the Dow bounced back with almost a half-point gain, 8 stocks down, every 5 higher at that stage. The rally attempt was quashed by unimpressive volume and increasing concerns over interest rates. So the market moved down for the remainder of the day, with the Dow Jones Industrial Average closing with a loss of 13.23 at 2688.78. Theoretical high of the day, 2713, and 0.10, the low down around 2677. Trading volume today was down some 6.5 million shares from yesterday's pace, and down volume exceeded up volume by, well, almost twice. The Dow Transports lost just over 9 3/4 points. Utility index managed to gain 0.06. The Dow 65 losing 5.16. The closing tick a modestly bearish -100. Standard & Poor's 500 fell 2.17, a little over a 2.5-point loss, and the 400, the 100 off just over 2.5 points, and the Commodity Research Bureau December index was off 1 1/10 points. New York Stock Exchange index fell just over a point, a little over a 3/4 point drop on the value line, and the Wilshire 5000 fell about 17 7/8 points. The bond market had the expected negative reaction to the lonely Southwest Bank of St. Louis boosting its prime rate back a half point to 10.5%, and the upward revision in third quarter GNP growth had a negative impact as well. Although the Federal Reserve did add funds to the banking system around midday, the fact that the Fed funds were as high as 9% then brought a little positive response from traders, so the market closed modestly lower. Tax-free and corporate issues ended with losses averaging an 1/8 point, while longer-term governments lost about 1/4 point, like the 30-year Treasuries dropping 9/32. The Shearson-Lehman Long Treasury Bond Index fell 3.14, and Fed funds, you say, most of the day were up there around 9%, finally ended at 8 5/8%. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets, platinum posted sharp losses in reaction to a soft gold market. Silver was down as well. The dollar closed mixed in light trading, falling against the yen while gaining ground against the mark after a round of profit-taking on the West German currency. The pound edged higher against the greenback. And oil prices closed mixed, rising 15 cents a barrel in New York while sliding 10 cents a barrel in London. American oil man T. Boone Pickens today renewed his call for restrictions on Japanese investment in this country. Pickens noted that he has been denied a seat on the board of Japan's Koito Manufacturing despite his status as the firm's largest shareholder. And he told reporters in New York that unless the Japanese move to change that situation, action should be taken to block Japanese acquisitions of U.S. companies.
All we want is representation. I have to think something in the financial markets is out of step. And so when you say, what would you do about it, then you get into, I mean, now I have kind of a conflict of interest in trying to answer that question. Off the top of my head, I'd say, you know, shut them down on buying American companies until they can open up their financial markets where we have access to their companies too.
And meanwhile, in Tokyo, 2 days of talks aimed at opening Japan's market to American satellite manufacturers ended without reaching an agreement. Washington claims that Japan is using government money to nurture the development of a domestic satellite industry.
Efforts to boost U.S. government funding to further the development of the U.S. semiconductor industry have apparently reached a dead end. Washington correspondent Dennis Moore reports.
U.S. semiconductor manufacturers have lost their lead in market share to the Japanese, and without a major government rescue effort, a presidential panel says, the U.S. will fall behind in technology, too. Today, the president's top science advisor said no way.
The money for direct government subsidies to somehow reverse these situations in a brute force fashion simply isn't available.
Bromley denied recent reports the administration was planning major cuts in high-tech research funding.
And I can tell you, without talking about any specific budget discussion, that were I involved in discussions where it was proposed that the Semitech process was being seriously cut back, I would do everything in my power to resist that.
Senators praised Bromley for saying the right things, but said semiconductor research is another case of the Bush administration not putting its money where its mouth is.
The statement of general support and general principles, and then the cutting off of any specific actions that will implement those general views, is very frustrating.
But how much the government spends on research may in the end be less important to the semiconductor industry than how much it spends in total and what the deficit does to the cost of capital in this country. American companies already spend almost 20% of their revenue on research and development, but the capital for new plants and equipment costs them twice as much as it does Japanese competitors.
You can maybe save PerkinElmer. Maybe the government can huff and puff and scare the Japanese away, but you've still got a company that is not financially viable in this environment. And so it is with a lot of our companies.
Which leaves the semiconductor industry, like most of Washington, wondering just how bad the pain will be when President Bush publishes his 1991 budget in January. In Washington, Dennis Moore for the Nightly Business Report.
Freeport-McMoRan today became the latest corporation to announce a major restructuring in an effort to boost its stock price. The plan calls for the diversified energy and natural resources firm to sell up to $1.5 billion of assets, including its interest in a gold producer, certain nitrogen fertilizer plants, and a 25% stake in a Korean fertilizer firm. Freeport says it'll use the proceeds from those sales to further develop its sulfur operations, as well as its Indonesian copper and gold mines and its oil and gas wells.
Shearson Lehman Hutton today announced a shakeup of its management ranks, making changes and appointments in each of the brokerage firm's 4 core business areas. The biggest move involves the reassigning of Chief Operating Officer Jeffrey Lane to a post as head of investments and public finance. The move comes as falling profits have led to a possible downgrading of Shearson's debt. Shearson Chief Executive Peter Cohen says Shearson now must shift gears from the rapid expansion of the past decade to a strategy that emphasizes internal controls. Paul?
This didn't shake up Shearson's stock on the big board. It was actually up at 8 at 15 3/4 points. Let's have a look at that closing Dow. Off 13.23 today. A little disappointment after struggling to get over 2,700 yesterday. About 5 stocks up for every 8 down. And a few more new highs than new lows for the year, 7 to be exact. Topping the active list on 2.8 million shares. Great Western Financial down 1.125. The company said it's going to add $200 million in the 4th quarter for loan loss reserves. And then Solomon Brothers downgraded its opinion, cut earnings estimates, and several other brokerages did too. Texas Utilities, a winding down of a dividend play off a quarter. Chevron bounced back with a 5/8 point gain today. Of course, the company's employee stock ownership plan is going to buy $1 billion worth of Chevron stock. Bank America, all the financial institutions in California, a little on the weak side today. A lot of concern over the California real estate market. Bank America down 1.25 points. Chemical banking fell 0.5 point. Philip Morris moving up just 3/8 of a point, although, as I mentioned earlier, they're going to buy $1.5 billion worth of their own stock in the coming months or years on an open market basis from time to time. Penn Central lost an 8. Philadelphia Electric moving up an 8. Then 2 big losers. L.A. Gear plunging 5 3/8. Merrill Lynch cut earnings estimates today. The stock broke support at 40. Then Telecom USA off 5 5/8. The company itself said it expects lower than the original projections for 89 earnings. Robinson Humphrey Brokerage then cut earnings estimates itself. Among widely held issues, American Telephone dropped 1/4, but Boeing bucked the trend with a 1-point gain. Merrill Lynch's analyst Phil Brannon has upgraded Boeing to a strong buy recommendation. General Motors fell 3/8. IBM down 1 point. IBM is assessing the possibility of further staff cuts, but it said there'll be no forced layoffs. Kellogg down 1 3/4. Goldman Sachs reportedly cut 89 and 90 earnings estimates for Kellogg. And United Airlines, in a weak airline group, off 4 points. USX dropped 1/4, but after the close, Carl Icahn said he's seeking government permission to buy more than 25% of USX stock. He holds 13.25% right now. Salant Corporation off, or I should say up 1.5 points. It's an apparel maker. We talked to officials there. They could think of no reason. They said there are no corporate releases. DeGiorgio Corporation up 1 3/4. Arthur Goldberg's investment group has extended its $32 a share buyout bid through Friday and may consider boosting it by $0.50 or so. Home Fed Corporation, another California institution, San Diego, down 2 points. Solomon Brothers cut earnings estimates there and downgraded it. Accuson Corporation off 1 5/8. Companies into medical sonar imaging, and Merrill Lynch cut earnings estimates today. Fannie Mae down 2 points. The company is going to buy $1 billion worth of mortgages from Security Pacific Bank. Newmont Gold off 2 3/8. The Heard on the Street column in today's Wall Street Journal said if gold breaks below $400 the ounce, that could make this stock very vulnerable. Over the American Exchange, a loss of 1.46 in the market value index. Trading volume down just about 1 million shares from yesterday's pace, and quite a few more issues down than up. Topping the active list on 1.5 million shares, BAT Industries moving up 7/16. Then Home Shopping Net off 1/8. Echo Bay Mines, the Canadian Gold off 1/4. December Gold in New York was off $4 the ounce. Fruit of the Loom gained 1/4. Atari off 3/8. U.S. Bioscience, which is in pharmaceutical research and development, up 2 1/8 points. We talked to company officials. They could think of no reason for the rise in the stock, no corporate releases. Dataram Corporation moved up 7/8. The company plans to buy back 1 million of its own shares. That's over 50%. And the price, $10 a share. NASDAQ trading, a loss of 0.85 in the composite index. Trading volume down some 3 million shares from yesterday's pace. 862 issues closed higher, but 1,109 lower. The index was off 0.18. MCI Communications topped the active list down 7/8. Apple Computer off 1/8. Microsoft off 1.5. The company says its personal computer sales growth in 1990 will only be about 10%, down from 20% or so in recent years. Nike off 2 points. Lynn Broadcasting fell 3/8. Intel up 3/8. Telecommunications A was off 1/4. Westmark International down 3 1/4 in sympathy with the drop in Accuson. They're both into medical sonar imaging, apparently. Autodesk was off 1/2. Laidlaw Transportation lost 1/8. Micro America Incorporated had a macro percentage gain, up 1 1/8 points. The company has approved SoftCell Computers stock swap bid. It's almost share for share, and SoftCell stock was at 6.5 on the close today. Agency Rent-A-Car moved up yesterday on rumors that Alamo Rent-A-Car was eyeing it as a possible acquisition, but Agency today said it's not aware of anything like that. Finally, Summit Bancorp dropped 1 1/2 points. Moody's has apparently downgraded a good deal of the company's debt. That's our Wall Street wrap-up. Jim?
Thank you, Paul. Back overseas, the Tokyo stock market continues to explore uncharted territory as the Nikkei average today topped the 37,000 mark to reach its 6th straight record close. While 1.7 billion shares changed hands, the upward momentum of trading was slowed by a wave of profit-taking. And in the end, the Nikkei average was up only 36 points to close at 37,021.46. Traders credited today's gain to continued optimism about the Japanese economy.
In a development that could spell trouble for Japanese car makers, Japan's car exports to the United States plunged in October, falling more than 22% below the level of the same month last year. The drop virtually assures that Japanese car exports to the U.S. will fall short of their quota for the 2nd straight year. And many in Japan see that as just one more sign pointing to a coming economic slowdown in that country, as Tokyo correspondent Spencer Sherman reports.
The basic theory is simple. Everything that rises must eventually fall. A small but influential group of Japanese economists and scholars have shocked their colleagues with recent predictions that the skyrocketing Japanese economy will soon fall to earth.
We have a slowing of domestic demand, coupled with inflationary pressures, so that the situation is likely to become increasingly stagflationary. We may see considerable jitteriness and nervousness in the stock market that could lead to a crash-type situation.
That's one of a handful of doomsday scenarios making the rounds in Tokyo. In another, a combination of economic and political events will force Japan into decline. A rapidly aging society will weaken industrial might, the affluent young won't save as much or work as hard as their parents, recent political turmoil will prevent government from making tough decisions on taxes, interest rates, economic restructuring, and trade. And warming East-West relations will weaken Japan's role in the Western alliance. The result? Less patience on trade and demands for Japan to pay more of its defense. There are, of course, many who don't buy the Japan in decline scenario.
If you look at this economy's current performance and probable performance, The high probability, very high probability, is that Japan will continue to do very well in, let's say, the intermediate term. And by that, I suppose I mean something in the order of 3 to 5 years. Past that,
The optimists point to Japan's past experience in overcoming the oil shocks of the 1970s. They also emphasize Japan's investment in plant and equipment and research and development, the highest in the world, and automation, which will take the place of a shrinking and aging workforce. But even the optimists see problems on the horizon.
I think one of Japan's real vulnerabilities, and it's not high drama, it's not tomorrow morning, is an increasing sense in Japan that the system no longer has full equities. That is, it's not fair.
Even mainstream economists agree that a growing gap between the haves and the have-mores in this rich society is a threat to its prosperity. Social discord in this traditionally harmonious society will do more, they say, to retard the Japanese miracle than all the doomsday scenarios wrapped into one. In Tokyo, Spencer Sherman for the Nightly Business Report.
Coming up, Adam Smith looks at what the Soviets can do about problems plaguing their economy. The General Accounting Office says the government is losing tens of billions of dollars a year in waste and fraud because of poor financial controls and accounting procedures. GAO Comptroller General Charles Boucher told a hearing of the Senate Governmental Affairs Committee that every major agency in the government acknowledges that it has weak financial management systems. And Boucher said that's a scary situation for taxpayers and the government.
When you have a $1 trillion operation with all the major components having weak financial management systems, you have vulnerabilities that are bound to end up with scandals and fraud and mismanagement, and that's the situation I think we're in, and it's a situation that we've got to work ourselves out of.
Boucher recommended that a chief government financial officer be established to oversee federal spending and accounting procedures.
The bulls were back out in force today in Taiwan as that nation's stock market posted a record 590-point one-day gain, erasing all of yesterday's record losses. The upward move came after Taiwan's government launched a public relations campaign hinting that it would roll back a proposed increase in the tax on stock transactions. Jittery Taiwanese investors were encouraged by that news, but analysts warn of possible turmoil in the market after Saturday's elections.
In tonight's commentary, Adam Smith, author and host of Adam Smith's Money World, says the only way the Soviets will be able to solve their economic woes is through the school of hard knocks.
Mr. Gorbachev and Mr. Bush are leafing through their briefing books, getting ready for their Mediterranean meeting, and with no agenda and no formal agreements expected. Mr. Gorbachev's problems have become very visible, and I'm not talking about the turmoil in Eastern Europe or even within the Soviet Union, but the economic side. Mr. Gorbachev has, of all things, a budget deficit. Some analysts think it could be as high as 14% of GNP. The central bank prints the money to cover that, and that's inflationary. At the same time, the Russians have, of all things, too much money. They have 450 billion rubles socked away in bank accounts and mattresses. That would be $720 billion, but that's the official rate. It's actually much more. If you think of all those rubles chasing few enough civilian goods, you get the picture of a potential for an Argentina-style triple-digit inflation if the lid was ever taken off. What could America do to help Mr. Gorbachev, assuming it wanted to? It could, of course, ship toothpaste and soap and so on. That would have to be bartered because the ruble is not convertible. Don Kendall of PepsiCo has been operating in the Soviet Union for a long time. He says the Russians will drink more Pepsi-Cola than any country in the world except the United States in only 10 years. Again, all those rubles available for Pepsi and pizza. Kendall takes the money out in vodka, Stolichnaya. Not many American businesses have so finally developed a sense of counter trading and barter. Mr. Gorbachev's foreign minister said, we don't need foreign help. That isn't quite true. What the Soviets need is help on how a market economy runs. That's something not taught in schools, but through many years of bumps and starts and the bruises of experience. The Japanese learned it very quickly, only a couple of decades. So the Russians have plenty of money. What they're lacking is the culture of the marketplace. I'm Adam Smith.
Recapping tonight's top stories, revised numbers put economic growth in the third quarter at 2.7%.
There's no growth in blue chip prices on Wall Street today as the Dow Jones Industrial Average declines almost 13.25 points, ending at 2,688.78.
And coming up tomorrow, commentator Lester Thoreau discusses America's prospects for catching up in such areas as electronics, HDTV, and machine tools.
And that's it for this edition of the Nightly Business Report for Wednesday, November 29.
Now for Paul, Linda, and all of us on the Nightly Business Report, I'm Jim Wicks. Good night.
This program is produced in association with Reuters, the world's largest electronic publisher, which provides the Nightly Business Report with news, market data, and communication services worldwide. And is made possible by A.G. Edwards, providing financial services through more than 380 locations. A.G. Edwards, a century-old tradition of putting the customer first. Kidder Peabody, one of the world's major investment firms. And GE Capital, providing business with comprehensive financing. Two companies of GE Financial Services. Digital Equipment Corporation, providing customers with the computing resources to facilitate easy, efficient teamwork across the entire enterprise. And by the financial support of viewers like you.
Local broadcast of the Nightly Business Report is made possible in part by member support and by a grant from Phonarola, Canada's business word for long distance, with offices in Toronto, Montreal, Buffalo, and Albany.